appreciate you having me on board, and thanks very much to all the attendees for joining today's presentation. As Gilbert mentioned, I'm Josh Disbrow. I'm a co-founder and chief executive officer of Aytu BioPharma. Pleased to be with you. I'm excited to be speaking with you today as we continue the company's transformation and a rapid path to profitability, given some positive changes to the business that we've recently implemented. If you're hearing about Aytu for the first time, you're hearing the story as we near the completion of our transition to become a very focused, prescription-only pharmaceutical business. And it's now driving positive EBITDA and soon, we believe, meaningful cash flow. As a reminder, I may be making some forward-looking statements, so as is customary, please refer to this safe harbor statement. Keep this in mind as I do go through the presentation. So let's go ahead and jump in. As Gilbert described in his introduction, we're a commercial stage pharmaceutical company, and we are focused on selling ADHD, that's attention deficit hyperactivity disorder, so ADHD and pediatric medicines in the US. And we have been US-centric, although I will say we've just begun exploring ex-US partnerships specifically for our ADHD brands and have signed our first licensing deal. In fact, we did that with a company in Israel just last year. Our companies are branded and unique. They're patented and they compete in very large categories. And our RX growth year over year has been very strong, growing to about 21% to almost 74 million in our fiscal 23. More importantly, though, has been our bottom line performance as we've streamlined our operations to focus solely on this growing and profitable, what we call RX segment or RX business, the prescription business. The prescription business posted positive EBITDA of nearly $10 million for fiscal 23, which ended June 30. And if you look at the trailing 12 months ending March of 24, the RX business posted a positive EBITDA number of over $17 million. So this has been achieved through product and revenue growth, of course, but also and equally a streamlining of operations that has reduced expense materially and has improved margins substantially, gross margins in particular. More on that process here shortly as it nears completion. And we've got great momentum in the business right now. You may have heard, and if not, I'll let you know that in the US and frankly around the world, there are many ADHD stimulant medications that have had supply issues over the last 19 or 20 months. And we can offer prescribers effective alternatives with our innovative brands at Adzenys competing with the likes of Adderall XR and Cotempla, both of which I'll describe here shortly. Cotempla competes with the likes of Ritalin LA as well as Concerta. And again, our revenue growth has been very, very strong. But I'll point out that the 73.8 million in RX revenue that you see here on this slide versus the 33.6 million in revenue for our core business, I want to make sure that to highlight the RX revenue, again, that 73.8 is really what's most important, as that is where we are focused now and going forward. The consumer business, while it has been a revenue contributor, it has not been generating EBITDA or cash flow. And so about a year ago, we decided to wind that unprofitable business down in favor of focusing on the RX business. Frankly, the losses of the consumer business and the losses in some of the other areas, which I'll describe, they've been masking the strength of our RX business, which has been indeed very strong. So as of this quarter, so the quarter ending June, which will end here just in about 10 days, we're essentially done with the consumer health unit going forward. That will be wound down and essentially will be written off. So if you're a person that perhaps is new to the Aytu story, I'd ask that you follow the RX business trends to really see how we're faring, as that is the go forward business. Our strategic pivot to focus solely on the prescription business has really transformed Aytu over the last almost 2 years. Previously, the company had numerous priorities going on, including our consumer health segment. We had an extensive and expensive R&D pipeline and a manufacturing facility, which again, all of these came together to mask the strength and the growth that we've been seeing in the RX business. So we've essentially gotten out of, or are in the final stages of getting out of, all of the cash burning elements that we had as part of Aytu. For example, the R&D pipeline was set to contribute over $20 million in cash burn over 3 years. Our manufacturing facility, which we're very close to now getting out of, that was negatively impacting gross margins, tying up working capital, and also hitting the bottom line by virtue of numerous manufacturing inefficiencies. And while we've grown volumes, margins still are depressed from really where they should be. And again, as I mentioned earlier, the consumer health business, it simply never turned a profit. It grew top line, but again, it never drove profitability. If you look at the RX segment, that is the part of our business, if you look at over the last couple of years, that has been consistently positive. It's been EBITDA positive 7 out of the last 8 quarters. There was really 1 quarter that was a bit of an anomaly that affected 1 quarter. Outside of that, it's really been an EBITDA positive quarter. So that's where we've got to focus, and that's where the company will be going forward. So think of us as a prescription business with ADHD meds and pediatric meds. And ultimately, our mantra has been over the last couple of years, stop the burn, fuel the growth, but most importantly, drive cash flow. And our RX segment is being driven by some very solid products, and these compete in very large categories here in the US, and they're being propelled by our proprietary program, RX Connect, which I'll describe in a little bit more detail. Driving growth in these IP-protected brands and leveraging our first-in-class patient support program, RX Connect, is really what has positioned us so well today as we efficiently market our products, but also drive down SG&A, which I'll talk to a little bit later. Top-line growth coupled with bottom-line improvements have been our calling card, and we've been hitting that with the entire team. We've been describing that to investors as we've had our public comments and our earnings releases. And all I can say is we're thrilled with how our efforts are paying off. It's really been great to see that when you focus on ramping growth in these categories, and when you can leverage a great program of a platform like RX Connect, you can really do well, most importantly for patients and for their clinicians, but also ultimately for shareholders as we've stopped the burn and really been able to drive EBITDA here consistently. So now just for a brief review of our RX business, and obviously I'm available for follow-up calls in the event that folks want to dig a little bit deeper. This is an intro call for many people, but happy to provide additional information on our products and our markets and so forth as interest dictates. So here, moving to the next slide, we really have essentially 2 franchises. We have an ADHD franchise and we have a pediatric medicines franchise. And the ADHD franchise is headlined by Adzenys XR as well as Cotempla XR. Adzenys XR ODT, as I mentioned briefly, competes with Adderall XR, and it is a stimulant, and it is the only oral extended-release orally disintegrated tablet form of amphetamine, which happens to be the most prescribed stimulant in the US. Adzenys works quickly. It lasts a full 12 hours. It is convenient for patients to take. And similar to Adzenys, moving over to the right, Cotempla XR ODT is also an orally disintegrating tablet, but in a methylphenidate formulation. It competes with the likes of Concerta and Ritalin LA. And Cotempla is also fast-acting, works a full 12 hours, and it has exceptional clinical data from real-world classroom studies showing the benefits in improved attention, improved testing scores as early as within 1 hour for kids between the ages of 6 and 17. And moving over to the right, we also have a proprietary line of pediatric multivitamins that contain fluoride, and they're branded as Poly-Vi-Flor and Tri-Vi-Flor, and they contain a unique and proprietary form of a molecule called L-methylfolate. Essentially, that's a fancy word for the final end product of folic acid, which is important for development for kids and people really of all ages. And then we also commercialize a patented liquid antihistamine called Carbinol ER, which is not captured on this slide. But going back to the ADHD category, it's huge. It's one of the largest prescribed categories in the United States with over 80 million prescriptions written annually. And one of the things that you will hear of consistently, you don't need to do much more than just Google ADHD stimulant shortages, and you'll see myriad issues that have been present over the last couple of years around stimulant shortages, intermittent supply disruptions, and the bottom line is that continues. As that stimulant shortage rages on, that has been well publicized and has really presented major challenges to patients and their physicians. We've been able, with our products, to step in and fill a much-needed void in the market and drive growth of these novel products and really, in many cases, take the place of, for example, Adderall XR or Concerta. And the growth of our products is expected to continue as more and more patients either get frustrated with their current situation with, say, Adderall XR, and they try Adzenys, they move over to Adzenys, and they find out that they really like it. They like it because it's a clinically different product. It's easy to take. It truly does work a full 12 hours. And patients, as importantly, experience the many, many benefits afforded by our patient access program, RX Connect. And we're excited about that. And again, I'll describe that briefly. So again, ADHD portfolio, pediatric portfolio, and the products really speak for themselves. And frankly, our results speak for themselves. If you look at the revenue build over the last couple of years, we've had consistent year-over-year revenue growth. And again, I'd point you to the prescription products, specifically ADHD and the pediatric products. Other products are products that we have essentially wound down. Those are products that are heritage brands. We actually had a COVID test kit at one point that drove some revenue, and we've essentially moved on from all of those products and really are just focusing on the products I just described, the ADHD brands and the pediatric brands. So again, consistent revenue growth and a really solid trajectory to be sure. But again, we're very happy to showcase our EBITDA trends. EBITDA positive in fiscal 23. And if you look at our 12-month EBITDA specifically for that RX segment, which again, I'll keep reminding you, is the go-forward business. We generated EBITDA of over 17 million for the trailing 12 months ending March 31st. And that's really where we would like to draw investors' eyes to make sure they're focused on that segment of the business. And of course, we're focused on driving the company to cash flow. And with almost 20 million in cash as of March 31st, we're hoping to begin building cash here very soon. So we're excited about the momentum. Just a real quick commentary on the ADHD category. It is a very important time in the category. We believe we're well positioned to fill that void, as I described. There's just been these persistent issues around shortages and supply disruptions for the better part of 2 years. The ADHD market continues to be challenged with these issues, and we see that continuing throughout the U.S. News reports almost daily. But even if the market supply returns to normal, we see continued adoption of our products due to their profiles, and again, due to our novel access program, which I'll get to, which really is some of our secret sauce, so to speak, and we're excited to share that with you. Similarly, the fluoride market is large, not as large as ADHD, but a good-sized market nevertheless. And our multivitamins that contain fluoride, they command significant market share within that market. Important to note for those of you that may be outside the U.S., and even those of you in the U.S., many areas in the U.S. do not put fluoride in the municipal water supply. And so our products that contain fluoride, they fill an important need in areas like metropolitan suburban New Jersey, New York, elsewhere. And our products ensure that patients get the fluoride supplementation they need while they're getting multivitamin support as they grow. And again, these products are novel, they're patented, and they stand apart from the other multivitamins based on a few things. Their unique, good-tasting profile, high quality of manufacturing, but also the addition of this novel L-methylfolate that we call arcofolin, and that ensures that L-methylfolate actually gets into patients' bloodstream such that they can benefit it for their overall development. And our RX trends are very solid, and with this is a small team, we have essentially 40 representatives in the US, so very, very focused. We're not a large pharma company by any stretch. We've got a focused infrastructure, but through that focused infrastructure and through the leverage we gain through RX Connect, we've been able to drive consistent growth, and specifically led by our ADHD brands. We've posted growth of 11% annually, and looking at the trends in April and May here recently, we're very encouraged, and those numbers are not on this chart, but we're happy with the momentum that we've really captured here as of late. Now, I've just mentioned this a handful of times now, but it bears describing in more detail, and that is our RX Connect patient support program. RX Connect, quite simply, is a game changer for us, but it's really a game changer for physicians and their patients. At a time when patients are struggling to get their medications, and this is ADHD and beyond, many, many categories, patients are experiencing medication shortages. But in this day and age where it's been difficult, particularly to access ADHD meds, we have partnered with a network of over 1,000 pharmacies around the country to ensure availability and a consistent price, which is critical. And this all ensures a consistent patient experience time after time and a predictable out-of-pocket expense. And when some ADHD meds, even generics, are costing patients hundreds of dollars per prescription, we commit to cap each patient's copays at $50 if they're commercially insured. And this enables product loyalty, repeat use, and we see the effect of this system with the consistent growth we're posting quarter over quarter. And what we can say is RX Connect is unique. It's multifactorial. It takes far more than just a few minutes to describe it. And that's important because it is complex, but ultimately it derives really unique value for physicians such that they don't have to worry about whether their patients can actually get the medicines they're prescribing. And RX Connect is entirely different than anything else other companies do, and it really separates us from the crowd. A truly unique game changer for the company. And importantly, the vast majority of our prescriptions flow through this network, upwards of 90% of our scripts, depending on the month. And this is a very good thing for multiple reasons. But most importantly, having this focused yet diverse channel provides us with a focus base of customers that ensure our patients get the highest level of service and the most effective price they need. And this is enabled through higher throughput through these pharmacies as it relates to them having filled our brand prescriptions. They can be sure patients are getting the best services and the most up-to-date program elements, and of course, the best price, which is critical. And we get great customer insights from this and are able to constantly monitor and modify and improve. So now just moving over to our financials, and we'll jump through those relatively quickly. And this presentation is in English on our website, which is aytubio.com. So again, solid revenue growth year over year with a focus now solely on the RX business, which grew to $73.8 million in fiscal 23. And just note that we are on a June 30 year end, so we'll report our full fiscal 24 numbers in September. We've had a very solid first 3 quarters of fiscal 24, and again, we'll report those out in September for the full year. But what we're most excited about is the significant improvement in EBITDA we've achieved as we're focusing the business, as we're improving margins, as we're reducing key expenses. And again, looking at the RX segment for the 12-month ending March, that business generated over $17 million in adjusted EBITDA. And just to keep reiterating, that is our business going forward. It's a prescription business focused on ADHD and pediatrics. And now a solid change in expenses. If you look at where we were really just 3, 4, 5 quarters ago, significant reduction to drive expenses lower year over year over year. Again, we focused on the bottom line to minimize cash burn. We've burned de minimis cash. If you look at our December quarter and our March quarter, we essentially maintained the same $19.5+ million in cash. So it's clear that we're effectively managing our cash. We are driving EBITDA. We're not quite to free cash flow, but we think we're very close. And of course, driving cash flow is a two-pronged approach. Top line growth while reducing expenses materially, and we've done that. You see here, we've essentially driven R&D to zero, and G&A and sales and marketing down materially, of course, as well. A lot of the sales and marketing from the consumer business has been pulled out. That is still in there, and so we expect to bring sales and marketing down and OpEx down a little bit further from even where we are today, although we are at a really, really solid spot. And I'll point out here in this slide, very solid balance sheet, essentially $20 million in cash, same as the previous quarter. This is as of March. Approximately 6 million shares outstanding. We actually did have some warrant exercises that came in last week. We announced that earlier this week that we refinanced our debt. We've kicked that way down the road, and that doesn't mature now until 2028. And so this is a bit outdated in terms of shares outstanding and so forth. But suffice it to say, we've got essentially 6 million shares against some pre-funded warrants that would essentially take our fully diluted share count in the $12 million range. So we would argue that based on the fundamentals, we think we may have you may have hit us at a good time in terms of when you might be taking a look at Aytu, just given the revenue profile, the EBITDA profile, and where we are from an operation standpoint. So let me just close by saying, very happy with the progress. We think we positioned ourselves well over the last year and a half or so. We're focused again on the prescription business. We're focused on continuing to close out all the operational improvements, inclusive of getting out of our manufacturing facility. We should be fully out by the fall timeframe, and then our lease expires at the end of the calendar year. So we're really in the final innings, so to speak, of getting out of that. And we are driving bottom line improvements as demonstrated by $17+ million in prescription segment EBITDA. So really excited to have been able to share the story with you. If you do have any questions, Gilbert, I'm happy to take those from the audience, understanding I went just a hair long here, but happy to take if there's one or two. And thanks very much for your time. Appreciate your attendance, and thanks for taking a look at Aytu.
Thank you, Josh. Yeah, there's some questions. Let me start by one from Edmund is asking, any potential deal with China to market and sell the ADHD products there, and how long will it take if it's want to get something like that to market the deal?
Yeah, good question. There is a growing methylphenidate market in China in particular, and so that's a market we would consider. And we are in constant evaluation of various markets. So we would absolutely consider China. We have had some, I'd call it relatively early stage discussions. In terms of approval, that's about a 2-year time frame from the time that we would strike a deal. So that wouldn't be something imminent. But market is obviously, China's a vibrant market, big market, and again, the methylphenidate market in particular. So that would be the market in which Cotempla competes, would be attractive. So it's something that we'll consider.
Yeah, a question from Gray is, what's your projection of the ADHD market in the foreseeable future? Is it true that more and more adults will be diagnosed with ADHD?
It's absolutely true that more and more adults in particular, but children as well, will be diagnosed. The rate of diagnosis has gone up significantly, particularly since the pandemic and the notion of working from home or remotely. And so we do expect a diagnosis to go up. We expect to see the category continue to grow. These products, frankly, are niche, and we've been able to generate a meaningful revenue base, particularly when you consider the relative size and scale of the company, on less than 1% market share. So quite literally, if we just grew to a couple of percent market share just in the U.S., that doesn't contemplate anything outside the U.S., which we are considering. You can see how this revenue line could be substantial. So we're excited about the rate of growth, and we do see significant growth ahead for these products.
One last question from Kai: is this recent revenue growth can be sustainable?
Absolutely, we've had that question before, Gilbert. Even as Adderall has come back into supply, and it is largely back, there's still issues in little pockets here and there, but generally speaking, it is off the shortage list. We've continued to grow in the face of Adderall coming back into the market, in the face of Concerta coming back into the market with some of their supply challenges having been addressed, and you're still seeing product growth on our side. So what it is very simply is they see the benefits of our products. They feel different. They feel more controlled throughout the entire day. And patients love the RX Connect program because they get the guaranteed availability at their neighborhood pharmacy. They get a guaranteed price of paying no more than $50 if they're commercially insured. No other manufacturer offers that. And so we're able to offer not just a product, but a full-scale service that enables patients to stay. We have a very sticky patient and a patient experience that enables that patients want to stay on these products because they've enjoyed, obviously, how they feel, but more importantly, enjoyed the seamless process and getting a product at a fixed price that they can count on.
Yes, Josh. Yeah, thank you for answering some of these questions from the audience.
Thanks very much, and thanks for having me.
Yes, thank you for your time.